Hello traders and welcome to my channel. If today is your first time coming across my channel, kindly don't forget to hit the subscribe button, put on notification bell so that anytime I post content like this, you'll be among the first to be notified. Now before we start with today's topic, which is premium and discount and how to use it to minimize loss, please probably if you have been finding it difficult to trade the forex market or the synthetic indices, or probably you have been trading it and you are experiencing more losses than winning, then this is time for you to join this mentorship now so that you can leverage on the information I'm going to be giving you, the secrets on how you can trade forex market, synthetic market, using the right approach, providing you with the necessary materials, both softwares and um, video guides on how to go about it. Then don't hesitate to chat me up on this WhatsApp number. One more thing is that once you join, I have a community on my WhatsApp group that I'm going to add you to, so that anytime we are doing analysis on any pair currently at hand, then you can also leverage on the information, then probably also take trades with it. Exactly. Then aside that, as time goes on, I still keep sharing other vital information with those who are in the channel, on my WhatsApp channel. So if you want to be part of this good and the best way of understanding how to go about forex trading in general, then don't hesitate to join. Now today's topic is premium and discount. Now many traders out there don't understand the advantage of knowing the premium and discount. They don't know that when you understand the concept premium and discount in trading, it helps you to identify when to join a particular trade, when to take your entry. Because before I finish with this concept today, after dealing with all the informations I'm going to be sharing with you, for those of you who are new to trading, you will see the reason why most of the times you are experiencing huge drawdown. That means you place a trade expecting it to go up. Now, the trade is going to take some kind of, it's going to make some delay or take delay before it goes towards your prediction. And on the moment that trade is reversing, probably it has not getting to the necessary area you're supposed to get to before you start buying. You just open the price and the chart and you notice a kind of move towards the upside. You didn't do your analysis if it is right for you to buy at that moment or probably to wait. Then, as a result of you are too anxious to just join the trade. At the end of the day, you start experiencing a huge drawdown. Then at the end of it, after the trade took you out, or probably your equity is not enough, it closes you down on 0 0. Then the trade starts going towards the area you expected it to go initially. This is as a result because you don't understand what is called premium and discount. Because there's reasons why you need to understand it, so that when you are dealing with entry and exit, it's going to help you a lot. It's going to help you a lot. So let's continue with the article before us. In forex trading, the term premium and discount are used to describe the relative value of a currency pair compared to its pair or expected value. This concept often arises when traders use technical analysis, specifically when analyzing price action based on market structure, supply and demand zone, or Fibonacci retracement. That means when you're using this concept or you understand this concept, it will help you to understand when price is going to be probably depreciating or when price is probably going to be appreciating. That means when it's going to be rising. Now let's break this concept into simple terms. This is how the chart normally looks like. This is just in form of illustration. I'm still going to take you to the main chart and show you how to go about it. Now, in this chart now, the upper part here, this upper part here is referred to as what? The premium level, and the lower part is referred to as discount level. Now, as a trader, let's say you open your chart. You have two options to consider. Where is price at the moment and where is price going? That is the two things that normally come to your mind as a trader when you open your chart. The reason why you should know where price is at the moment and where price is definitely going to go, the only concept that is going to help you identify it so easily is market structure. Exactly. The only concept that is going to help you understand when is price currently and where is price probably heading to is based on market structure. So probably if you have not watched the video on market structure, I checked my channel on the playlist. the video is there. So it's going to help you a lot on how to identify when price is at a premium zone and when price is at a discount zone. Because when you open your chart, it's not written anywhere premium or discount. It's only based on market structure that you can tell, okay, this price is at a premium zone and if this price is at a discount zone. So if price is at a premium zone or price is approaching a premium zone, let's say price is approaching a premium zone, how do you know? Now, I told you it's based on market structure. Take for instance, price moved up like this, made a pullback, break, creating higher highs, right? And break towards the upside. Now, for you to join this uptrend, you have to identify a good area where to take your entry. Imagine someone who took a buy opportunity here. I'm just giving you an instance. Who probably priced at this point, he took a buy opportunity. After some minutes, right, price started dropping. Now, tell me, will that person encounter drawdown or he or she will not encounter drawdown? He or she will definitely encounter drawdown because when you open a buy at this point, you are definitely expected to experience a huge drawdown. So, for those of them who are greedy, probably open 4 or 5 positions at an area like this. When price started dropping or price start dropping, they will start having a huge drawdown. This is why some of them will start closing trade immediately on their own, right? And those of them who couldn't close trade or probably still expecting price to go towards the upside, we now experience a total shutdown in their account. That means the account will go back to 0.00, leaving them frustrated. So because these people don't understand market structure, they don't understand the concept premium and discount, right? So they become a victim of such scenario. So if you are to join a move like this towards the upside, this is a good area for you to wait for price to come to. And this area is referred to as what? A discount. A discount. That means you want to buy at a discount and sell at a premium. It's just like you going to the market, for instance, you going to the market, you ask for a price of a shirt, right? And they told you the price of that shirt is around um $20, right? $20. After few days, you go back to that market again. They told you that price of that shirt now is around um $10. So you don't have any other alternative than to buy it. The thing what you just did was you buy at a discount. In another scenario, you can go to the market and price for an article or maybe a kitchen utensils, and the seller told you, okay, the actual price is around $100, right? But because you came at this point in time, I'm going to give you a discount of uh I'm going to give you a discount of 10%, or I'm going to give you a discount of 50%. So if you are given a discount of 50% from 100, that means you'll not be paying that $100 any longer. Rather, you'll be paying let's say $50, right? So the same scenario or the same approach is what happens when you buy. You take your entry at the wrong point. Like as I was saying before with the illustration that price was moving up, right? And you want to join this move. So you only wait for price to come to an area of discount. And the only way you can do that is for price to fall down to this level. What it simply implies that there was so much buyers at this point. That was why price was able to push up, right? So if you should come and buy when the price is now high at this point, if price should start dropping, it means you are experiencing loss. It means you bought the article at the rate of you bought an article at the rate of let's say $20 at this point now. You bought it at the rate of $20. When you now bought it at the rate of $20, you are buying to make profit. So because you are anticipating that the price is going to high, all you started experiencing, the price started depreciating all the way down till it even dropped up to something you bought for $20. They sold it up to the level that it was now sold for 5 naira, $5. That is what is mean by you placing a buy order at this point. Then the price started depreciating up to this level. So it is now say it will be safe if you had waited for price to come down to this point. That means instead of you buying for that $50 or $20, you later buy or purchase it at the rate of $5, right? You bought for $5 at this point. If you had waited to price to depreciate to this level. So that is why you need to understand the concept very well. So if you buy for $5 at this point, right? If you buy at this point for $5 and then eventually price now move up above the exact point at the earlier point, which people were buying for $20, it means you'll be making $15 profit when price come to this area. So this is what discount and premium helps you to understand when it comes to trading. So you buy at a lesser price and then price appreciates. So if you are to sell what you buy at this point now, it means if you are going to sell it at this point, you'll be selling it for $20, meaning you have made profit, right? But so many people who take trading as gambling, who don't even understand A from B, they decide to open trade at any point or at any point, just having this mindset of uh let's say psychology or believing it's going to go, and at the end of the day it didn't go towards their favor, so they end up losing. So you buy when price is low and then you sell when price is high. Exactly. That is the essence of understanding the concept premium and discount. So, and I told you that for you to understand this concept very well in the forex market, the only thing you can do is to understand a particular concept called market structure, because it is the help of market structure that will determine or help you to understand if at this point you are to sell or you are to buy. Is that clear? So when you understand this concept, it will make trading more easier for you and it will minimize your losses. Instead of having 100, 200, $300 loss, you'll be having probably maybe $2 or $1 loss. Is that clear, guys? So in this is an illustration of how it looks like. Now let me give you a full detail of this illustration here. This is a premium and this is what a discount. So let's say for instance you want to sell, right? The only area you are going to sell, you've bought in an article and you have it in your possession. So you want to sell that article when price is at a premium zone. So and price at this level, I told you that at this level is a premium zone. Now look at what happened. Using market structure, price was at a support zone here. It went up, right? Came back. At this point, the structure has not broken. Price is still bullish. And so got so kind, price went above the initial move, meaning that price has broken structure. You can only buy when price comes to this point. But if you have any idea that price is going to drop from here, then you can sell. But since the fact that most of the time, most of you don't even know if you are going to sell or you are going to buy. Now, immediately this price drops to this point and you buy, let's say you take a buy because you take this area as area of discount, right? This was the area that led to the break of structure. I'm not coming back into forex market, forex trading now. This was the area that led to break of structure, right towards the upside. So the belief is that when price comes to a discount and you buy, if price should rise, you are going to make profit. But if price should drop, you are not going to make much losses because this is going to be your area of what stop loss. This swing low is going to be your area of stop loss. So now compare yourself with person who is buying at this point and price drop up to this level. When you are losing $1, the person is losing nothing less than maybe $20 or $50, depending on the lot size and number of position he or she opens. But since you have been able to identify a good area, let's say price took you out, right? At this point, you don't have any reason to panic, right? You don't have any reason to panic. Two things is going to happen. So when price comes back to this, you now be expecting you now identify this area as your premium zone. Once price break below this point and take you out from here, this area now becomes your premium zone where you'll be expecting price to visit in the nearest future for you to take what sell. So you anticipate for price to come down to this come up to this point before you take your sell. And if you are going to apply your stop loss again, your stop loss will be few pips above this high, right? So you now see the difference of you buying at a premium, then sell. Sorry, buy at a premium, then sell at a buy at a discount, then sell at a premium. But in this case, price didn't come to this point; it started dropping. Now there is a concept I recently explained on my channel, which is called breaker block. So when you understand that concept, you will know why you should take a sell or probably anticipate for sell opportunity in an area like this that price initially took you out. So you see, there are so many information on my channel that you need to leverage on. But if you are still finding it difficult to use them, then just join my mentorship class. Everything will be more easier and simple. Is that clear, guys? So you can now see the reasons why you don't just buy anyhow in your trade in the forex market or you sell anyhow. So this is the best area now for you to sell. So definitely if you are a trader who doesn't understand market, probably price was dropping and get to this point, right? And you took a sell opportunity, right? You place a sell. Probably it will come to this point and you'll be happy because you're making profit. All of a sudden, immediately price get to this point, price started buying. Now, at that moment, you start experiencing another drawdown. All these things happen because you don't really understand what price is doing. You don't understand so many concepts that will have served as a guide for you to understand when to buy and when to sell. So this is just how premium and discount looks like. But that doesn't stop it. We are still going to proceed further to talk more about this particular concept. Now, moving down, this is another scenario which I just showed you. This is for a chart scenario. Now, this person is waiting for price to come here before he or she will place a buy order. This is what this person is trying to say, that when price come here, he or she is going to place a buy order. The reason is because he understands market structure. And let me just quickly give you a reason which probably when you watch the video regarding market structure, you get to understand better. This was the last high that led to the break of structure towards the downside, right? If you don't know, go and watch that video very well. This was the last high that led to the break of structure. So the move that led to the break of this high then is what we are going to consider as area of interest. So this is going to be his own area of interest to take what? Buy. Then his stop loss, he can decide to put his stop loss at this swing low or probably make it tighter, put it here. So if price should respect and break up from there, so he's anticipating for price to come or move towards the upside. So that is the illustration this person is just talking about or trying to illustrate in this particular chart. So let's proceed with the details. Now, what is premium in forex market? For you to understand it more better now, a premium occurs when the price of a currency pair is considered overvalued or higher than its fair value. In this scenario, trader sees the price as being in a region where selling opportunities are more favorable. Exactly. When you understand supply zone, demand zone, support and resistance, bullish order block, bearish order block, then you this information will be more clear what is interpreting. I've already given an illustration initially based on what we saw at the top. So this is a good area for them to sell. That is in a premium zone. Now let's have an example. Imagine a currency pair like Euro USD. If the price has moved significantly higher and is in an area where historical data shows selling pressure, resistance level, or supply zone, traders might consider this area a premium zone. That is all. That means your supply zone becomes your premium zone. Your bearish order block becomes your premium zone. your resistance area becomes your premium zone. That means you see advantage of taking sell than buy. Nobody sees taking sell opportunity in a support area. No. Nobody sees opportunity in taking sell in a demand zone. No. Or in a bullish order block. No. Rather, they see buying opportunity in such area. So, and those areas are referred to as discount, where you buy less and you sell at a higher rate when price increase. That is just all. Traders often say price is too expensive here. It is better to sell. Is that clear? That means when price has got to a premium zone, they now see price. This thing is too high. Oh. Ha. This place, let's start selling so that we will be able to make profit. When you buy something for 5 naira and you sold that thing at the rate of 100 naira, it means you have made profit. Why are you selling at 100 naira? Because price got to a premium zone. The price increased so drastically. That is why people like to take advantage of investment. You see them buying shares that, okay, I'll buy this share at so discount rate, because if this share should appreciate in price, when I'm going to be selling it, I won't be selling it at that. You'll be making more profit. So if you are trading, see yourself as a business person who is trying to invest in a particular price or in particular stock, so that when the stock appreciates, if you buy when the stock appreciates, you'll be able to uh, sell, make profit. Now, for instance, when you buy, let's say you take a buy opportunity on Euro USD and price increase so drastically up to the area you put your take profit. You taking profit from that point, meaning you sold at that point. Exactly. When price hit your take profit, it means price has hit in your price has sold. You have sold out that stock when it was high. So that is just the scenario. Is that clear? Let me give you a simple method. Let's say this was the level you bought, right? This was the level you take your buy based on support, bullish order block, demand, and other factors, right? You bought here for 5 naira at that zone. You place your buy when price came down to that point, right? You place your buy, and at the time you place buy, price was so down that it only to cost you $5, right? It only cost you $5. Now, when this price start appreciating or increasing and increase up to this level, then let's say your TP was around this point, this swing high. This is where you put your TP, right? That area, that is where you put your TP before price later broke above that point. So, and that point, price was around $20. Price was around $20, right? $20. And that zone was where your TP is. Immediately price hit your TP, you have sold. It means you have sold. You bought and price hit your TP, you have sold. Then if you sell, price hit hit your TP, you have buy. You sell at the rate. Let's say you sell from it. Let me give you the opposite scenario. Price was dropping, right? Made pullback, then break structure. So immediately break structure here. Here becomes your area of premium for you. This is area you are expecting price to drop from again, because price has dropped from that point price drop from that certain level at some point. So immediately price retrace back to that point. You sold again for $5, right? You sold for $5. Now your TP, let's assume your TP was somewhere around here. It's just an illustration though. And then price drop all the way from there and hit your TP, breaking another structure again. So immediately price hit your TP here, you sold, that means you bought here. Is that clear? Immediately you opt out, once you hit your TP, you have bought. So it is a transaction. You place a sell, then it buy around here. That means hitting your TP. So this is what it all means by discount and premium. So at premium, you sell at a lesser price, then at a higher price. When price got to a higher zone and you're pressing retracement, the amount you're going to sell the article is very small, and the profit you are going to make when price continue going down, you are going, because when you sell and price drops towards your favor, you make profit, right? And when you buy, price appreciates, you make profit also. So these are just understanding where it is safer to buy and where it is more safer to sell. That is the function of understanding the concept called discount and premium. So they say traders often say price is too expensive here at a premium zone. Key traits of a premium zone: found the upper part of the trading range, aligns with areas of resistance or supply. Is that clear? Price is likely to reverse or correct downtrend at that point. That means buyers who were pushing price all the way up, that moment there is a pressure of sellers at that zone. Sellers might now come in again because they have given you a hint. Either price have been falling from such zone before, or the market makers have created a footprint at that point when you're using the bullish and bearish order block or supply zone and demand zone. The market makers have given a footprint at that zone. Then you are going to these are the things you are going to consider before you take your sell, because those areas are referred to area of premium, where price is going to be what, a dropping. Price is likely to reverse or correct downtrend. Yes, because price can't continue going up. When price make an impulsive move, there's a correctional phase. So these points, areas where price is making correctional phase, it must be an area of resistance initially. So price has to do what, respect it. At some point, then they will drop. So these areas are considered premium in the forex market, where you are expect to take sell, and areas where you expect to take buy are considered areas of support or bullish order block or demand zone. Is that clear, guys? And these areas are usually at the swing points of the trade. So proceeding further, what is discount? Now we've talked about premium. What is discount? A discount occur when the price of a currency pair is considered undervalued, right, or lower than its fair value. In this case, traders see the price as being in a region where buying opportunity are more attractive. Exactly. Just like what I told you initially, that price was moving up, later came down. Now this move break above a region here, creating here as a discount zone. In future, when price starts coming, they now consider that no, this price that this dropping so drastically now, it's more than the value is supposed to be worth than this. So this is the area you now come, okay, let me buy it from this way because it has devalued so drastically. Let me buy from here. And the only way you buy from here, you will not just use your eyes or your based on psychology. There are other factors, probably an area of demand, area of support, yes, area of bullish order block. These are areas where you should consider, or probably a flip zone area you should consider to buy. And then when you buy it, your stop loss will be very, very little or very minimal. So in such case, when you buy at this area, due to other factors and seeing price dropping so drastically, showing that the value is undervalued, then you take a buy and then you expect the price to go above the previous point. Is that clear? So this point where you take this buy now is referred to as a discount area. Is that clear? We are still going to go to the chart and I'm going to explain more better. It is considered a discount area or a discount region. Now let's have a scenario, an example on the chart. Take the same Euro USD pair. If the price drops significantly to a level where historical data indicates buying pressure, support level or demand zone, traders consider this a discount. Is that clear? They consider that zone a discount. They consider that zone a discount zone. Is that clear, guys? So such zones are considered a discount area or region. Traders often say price is cheap here. It is good area to buy. It is what? Good area to buy. Now, key traits of a discount zone found in the lower part of a trading range, align with areas of support or demand, price is likely to rise or rebound upward. How to identify a premium and discount zones when you see them on the chart. Trader uses various tools to identify premium and discount zones. The first one is the Fibonacci retracement. Divided the price range into levels, e.g., 0 to 50% down to 100%, and the midpoint between a premium and discount is called the equilibrium. I'm going to teach you that when I go to the chart. A premium zone is typically above the 50 level, while a premium zone is typically above the 50 level, while a discount zone is below the 50 level. Support and resistance level. This is another factors or determinant of premium and discount. These areas that you can find them. Resistance level often act as premium zone, while support levels often act as areas of discount. Supply and demand. This is another factor which I've explained initially. Supply zone, where sellers dominate, are considered premium areas. Then demand zone, where buyers dominate, are considered discount area. Market structure. In an uptrend, retracement to a lower level is called discount, providing buyers opportunity to what? Buy. That means if you are going to continue with the trend. In a downtrend, retracement to a higher level is called premium, providing sellers opportunity to what? Sell. Why are these concepts important? Why should you as a trader or somebody who is just starting trading, why do you need this concept? Understanding premium and discount zones helps traders make better decisions by avoiding impulsive trades at unfavorable price. Just like what I told you initially that let's take for instance, price was moving upward, right? Big structures towards the upside. You that just who the person who is anticipating to buy will not consider selling at this point because when you when you buy at this point, you have bought at a higher price. That is what this other concept this chapter is telling you that if you should buy at this region, you have bought at a what higher price. You have to wait for price to come down to this region before you buy because at this point, price is more cheaper compared to when it's at this point. Then if it is in a sell scenario, sorry, price is dropping, right? Make an impulsive move, then break structure towards this downside. So you now who is taking sell here, you are taking huge risk. Exactly. You are taking huge risk. The best place for you to take your sell is at this zone. Price will be more favorable for you when you sell from here compared to here. That is just the illustration about this discount and supply. Now, number two, entering trades in an area where the probability of success is higher. That means you understand where the probability of price going towards your direction rather than encountering a drawdown. Exactly. So this topic or this concept helps you to identify areas that price is going to be more favorable to you compared to what you have been doing initially, whereby you end up losing or in fact blowing off your account. It also enhances risk to reward ratio. That means you'll be able to identify what is your risk and what is the reward you are going to get if price eventually go against you or go in your favor. A trader looking to buy should wait for the price to enter a discount zone, increasing the likelihood of a profitable trade. A trader looking to sell should wait for the price to enter a premium zone, improving the chances of encountering a reversal. Practical example, let's say Euro USD is an uptrend. The price rise from 1.1000 to 1.12000 and then start retracing. Using a Fibonacci tool, the 50% retracement level is 1.1100. Price above 1.1150, e.g., 61.8% retracement may represent a premium zone, right? Price below 1.1100, e.g., 38.2% retracement may represent a discount zone. A trader can look to sell at the premium zone around 1.1150 or higher. Look to buy at the discount zone around 1.1050 or lower. So this is all about premium and discount. Now let me now show you the practical aspect on the chart. Exactly, guys. Okay, take for instance, this is on volatility 50 index. For those of you who love trading, uh, what is it called? Synthetic indices. Now let's start with market structure first. This was the okay. Let's say this was the high that gave us the last low of the market. Immediately price breaks above it. Now we now see this area as our area of what? Uh, support, either area of support, area of demand, or area of bullish order block, whichever one is the case. Now, you that is looking at this chart, you know it will be unwise for you to see price at this point here. After giving you an area like this, for you to see price at this point and then you are initiating a buy, it is unwise for you. So if you take a buy, now imagine how price has dropped so drastically all the way down. If you are still fortunate to be in this market, the huge drawdown that you are going to be having is not going to be small. It's going to be a very massive drawdown, right? So the reason is because you took your buy entry at a wrong position. The best thing you would have do or best thing you would have done was to wait for price to come to this area before you execute a buy. Now talking about the Fibonacci retracement we talked earlier on. Now you can use your Fibonacci to retrace. Okay, let me see the distance between this current point and this current point as at when price was here, so that you know either to be anticipating for buy or a sell. Now when you come to this point, let's involve our Fibonacci. So let's put Fibonacci to at the lowest zone point and drag it to the high. Now this midpoint here, this point here is 50%, right? That is the equilibrium. That means from this point, from this lower point to this high, the midpoint is 50%. That is where is our that is our level 50, right? Now, if price should go to this point and price starts retracing, where will it be safer for you to buy? Is it not towards around this region? Once price drop below 61 and coming down to maybe 30 and so, then this is where you should be anticipating for buy. But let's say you were expecting price to come here. Price didn't come here when price was at this point, at this top high point. Price didn't come. Then what happened next? You notice that price came down, price made this retracement, right? Then gave you this move towards the upside, right? Then finally break below that point. Now, at this 38.2%, there is a break of structure there, meaning we can now consider this upside as what? An area of premium. What you should be expecting if price still fails to come down, your alternative move should be okay. Since price have failed to come down to my discount zone, which is below my 61.8 now, and it has created another opportunity for me. So let me consider here as area of premium. Now, when price retrace back to that point, all the way up above your 23.6, above your 23.6, then it is at area of your what? Premium zone. You now take your sell. Your stop loss will not be far. It should be around this point, which is the swing high, right? So if you have taken a sell from there and price even dropped to this level, automatically you are in profit, despite that price has not gotten to the area we are waiting initially to do what? To buy from. Is that clear? So at this point, you are already on profit, comparing yourself to somebody who would have taken a buy at this point, who is experiencing huge losses, and you that took a sell when price retraced back to this point, and then price is here. So this is the reason why you should understand this concept and understand areas where you should trade, so that from now henceforth, before you take a buy or initiate a buy order or a sell order in your chart, consider where is price before you make that before you make such decision. Is that clear, guys? Before you make such decision. So if you still want more information, probably if you watch other videos regarding market structure, other blocks, and then talking about breakout block, you now find this topic more easier and more well explained. So, but if you are still finding it difficult, probably you still want more information. You want somebody to just hold you by your side, by his side, and then teach you how to approach this market the right way. Then don't hesitate to join the mentorship class with this contact. If you check the description below, you see my WhatsApp number where you can chat me up, then you can be part of the community. Don't forget, I told you that you are going to have opportunity to join my WhatsApp community after joining the mentorship. Then I'm going to provide you with all the necessary information and materials that is going to make this journey easy one. Thanks for watching. If you have not subscribed, kindly hit the subscribe button and put on the notification bell, because I'll keep posting content like this to keep enlightening you more on how this forex market operates. See you in the next one, guys.